5 out of 7 speakers are right at the same time. When consensus gets this tight, the move accelerates. Right now, the S&P 500 is at 7,501.2, the 99th percentile for the past year. Historically, the S&P at this level has historically marked a regime inflection, says the data needs to confirm. The commodity analyst says, we are in a commodity supercycle driven by underinvestment and deglobalization. In the next few minutes, I will show you who the data says is right and what it means for your money this week. The scoreboard just changed. A scoreboard flip means the numbers shifted. Pay attention to what moved and why. The commodity analyst called it commodity supercycle. Oil at $98.8 confirms it. 146-day streak. Score 1 for gammon. Credit will blow out. Investment grade spread agrees at 76 basis points. 5 days running, the volatility expert called it volatility expansion. VIX at 17.9 confirms it. VIX at 17.9 confirms it. 3 days running, Snyder just moved from wrong to right. Snyder is right and the data keeps proving it. The dollar index at 99. The dollar analyst just moved from early to right. The dollar analyst called it dollar milkshake higher. Gold at $4,572 confirms it. McElroy might be right, but the data has not confirmed the thesis yet. 145-day streak. Hartman might be right, but the data has not confirmed the thesis yet. 139-day streak score today. 5 right, 2 early, 0 wrong. When consensus gets this tight, moves accelerate. Stay positioned. Today's big question: are commodities in a supercycle, or is this the top? On one side, says the data needs to confirm. That is the setup. Everyone hears it on the podcast. It sounds convincing. On the other side, the commodity analyst says, we are in a commodity supercycle driven by underinvestment and deglobalization. Two smart people, opposite conclusions. So who is right? Both oil and gold are falling together. When multiple signals confirm the same direction, the move tends to accelerate. Oil at $98.8, 92nd percentile, down 2.4% today. Gold at $4,572, 69th percentile, down 2.3% today. Copper at 6.3 percentile, 98th percentile, down 3% today. Bottom line, the data is split. Neither side has a clear edge, which means the resolution is clit. Neither side has a clear edge, which means the resolution is coming soon. If oil drops below $80, the supercycle call is in trouble. Right now, it is at $98.8. If copper breaks to new highs while oil falls, it is demand rotation, not a supercycle. Oil at $98.8 is in the 92nd percentile, reversal territory. If it drops below the 75th, the thesis weakens fast. Gold at $4,572. We'll track it daily on the scoreboard. Phase 1 is the good times, but good times do not last forever. Here is how close we are to the edge. We are 74 basis points away from Phase 2, the phase where credit breaks and volatility spikes. There is no acceleration in credit stress yet, but we are watching the pace, not just the level. The trigger, investment grade spread crossing 150 basis points. Currently at 76 basis points. Pace is flat or improving. No urgency right now. Phase 1 means risk on is working. Equities, commodities, and real estate all benefit from loose conditions. Enjoy it while it lasts. For context, the last time credit stress built like this, credit spreads blew out and high-yield bonds saw drawdowns of 15%. The credit and rates layer has initial, jobless claims, copper-gold ratio flashing red. Gammon says, the Fed is breaking things and credit spreads will blow out. The data agrees with that assessment. Phase 1 holds with 74 basis points of buffer. Conditions favor risk, but do not get complacent. Wall Street trades the index. We trade the ground. Here is what the ZIP level data is screaming about today. Los Angeles, CA, payment burden is past the breaking point. Los Angeles, CA, median home about $1,787,000 on about $91,000 household income. Price-to-income ratio, 19.7. When the math stops working, sellers find out before buyers do. Delta County, CO, builders are pouring concrete where nobody can afford to buy. Delta County, CO permitted 115 units this year, up 117% year over year. Affordability score in 81,419, 19,100. Supply chasing demand that doesn't exist at these prices. Orange, CA, payment burden is past the breaking point. Newport Beach, CA, median home about $2,662,000 on about $138,000 household income. Price-to-income ratio, 19.2. When the math stops working, sellers find out before buyers do. These are not hand-picked metros. They are the loudest signals in the housing data right now, chosen by the numbers, not the narrative. Today's debate asked, are commodities in a supercycle, or is this the top? Let me show you what happened the last time we were here. Copper at $6.37 is in the 98th percentile. That means it is higher than 98 out of 100 days in the past year. In 2022, copper dropped 35% on China lockdowns and global recession fears. In 2020, copper crashed in March, then doubled over the next year on stimulus demand. In 2011, copper peaked above 4.60, then gave back 30% as China growth slowed. Different environments, different catalysts. But every time, the resolution came fast. The pattern is not the level, it is the speed of the move once it starts. Meanwhile, oil at $98.8 is in the 92nd percentile. The last time both copper and oil were at these levels simultaneously, the resolution came within weeks. That is why the scoreboard matters. It tells you which speakers saw it coming and which ones missed it. History does not pick a winner here, but it does say the resolution is coming soon. Be positioned before it arrives. Here is what the data says to do right now. Do not chase the S&P 500 here. The 99th percentile is reversal territory, not an entry point. Avoid Phoenix at 41% payment burden. That is stretch territory. Phase 1 holds. No alarms, but the runway at 74 basis points is shorter than last month. 5 out of 7 speakers are right. The commodity analyst, Gammon, the volatility expert, Snyder, and the dollar analyst. When this many align, the trend usually has legs. Every signal is live at analyze.builderslens.com. The podcasters give you the thesis. We give you the scoreboard. Subscribe, and I will see you tomorrow morning.